and welcome. You're watching Hot Money on NDTV Profit. I'm Harsh Saita. With me is Varsha Chandnani, and we both, as well as the entire team here at NDTV Profit, wish you and yours a very, very happy Diwali and a very prosperous New Year and a happy festive week. Of course, markets in fine fettle, cheering a very, what's going to be a very bright Diwali, hopefully. 1.25% higher on the Nifty 50. So you're doing fairly well. We're just off the day's highs, but clocking new highs, or rather breaching the day's highs as we speak as well. Let's quickly pull up the contributors, see which ones are contributing to the index. On the Nifty 50 itself, 4% now on ICICI Bank, the top gainer on the Nifty 50. Reliance Industries also has made a good move, or nearly 2% higher, and therefore aiding the Nifty. So those two really carrying the Nifty ahead. There's also M&M, which is doing fairly well in trade, 4% higher on M&M as well. So those are some of the movers. Shriram Finance, we can pull that stock up 6.5% higher on the back of very solid numbers. Very different from what we're seeing in terms of the other PV and CV financiers, and that's why you're seeing that reaction on the counter, 6.5% higher. IndusInd Bank, after that 19% lower move on Friday, is up 3 to 4 odd percent as well. So you're seeing some good moves within Nifty 50 companies. What's not doing well? Nothing major. Coal India is down 4% on the back of poor numbers. That margin miss hurting the stock today. But outside of that, on the Nifty, no major stocks on the decline, and that's a positive. Let's look at the advanced decline very, very quickly before we go on to our first guest for today. The advanced decline, there you go, just getting better and better as the day has progressed. Now we are at 500 declines to 1660 advances. So the breadth of the market after that initial bit of whipsaw has seen a steady positivity, and that's what's reflecting on the small and mid cap indices as well. 1.5% odd on the small cap as well as on the mid cap, just about 1%. That's how it's essentially playing out. But let me quickly bring on board Vikas Maheshwari, who's the Group CFO at Rainbow Hospitals, to talk to us about the Q2 numbers. Also get a sense from him as to how things are playing out. Welcome, Mr. Maheshwari. First off, I want to try and understand from you. You've grown well in Q2. That number not reflecting on your RPOB. What's happening there?
Yeah, thank you for inviting us, and wish you and we are a very happy Diwali first of all.
Wish you the same, sir.
So the if is a pediatrics and the mother care hospital, first of all, you have to understand that. And RPOB is the matrix which may not be a right matrix to judge the performance, because there's the multiple parameters which comes into it. Is ultimately is a derivative where the pair mix, case mix, and plus the alloys which can change the RPOB overall. So in this quarter, the pediatrics business, because of the seasonality, it was much higher. Plus our alloys has also gone up somewhat. So what is important in our business to monitor our growth and to judge the pediatrics and the mother care hospital is that how much is the IP and OP volume is growth, and the occupancy. I think these are the two right metrics to judge us as because we are the only hospital in India which is more of pediatrics and the mother care hospital and the listed. So our metrics to judge has to be a little different because of little bit seasonal business which comes on the pediatric side, which is the September quarter, which is the more busier quarter for us. And then it's slightly tapers off as we come to the December and the March quarter. So I think the metrics which we should be judged is the occupancy, the revenue growth, and on the profitability side.
Well, Mr. Vikas, hi, this is Varsha. So let's talk about the occupancies then. So there has been increase quarter on quarter and year on year increase when it comes to your occupancies. I believe that this has been driven by the new capacities gaining traction. Now, what is your target when it comes to peak occupancy levels? Where you want to take this to?
There's a very right question, Prachi. So what we say is that since we keep adding the capacity every quarter, every year, we are adding the capacities. If we don't add the capacity and we leave that business as it is, we can target up to 55 to 65% of the occupancy. On an average, 60% occupancy for our matured hospital is a good occupancy levels, because in our case, there are the 2 or 3 parameters which is slightly different than all the other listed hospitals listed, which is mostly on the adult care hospital, multi-specialty hospitals. In our case, what happens is ALOS is very less. It is between 2.6 to 2.7 on an average, whereas the multi-specialty other hospitals on an average has the ALOS of 3.5 to 4.5. So our throughput and the turnaround is much, much higher. So we drive our revenue profitability based on our throughput and the efficiency in terms of the bed rotation. So in case of pediatrics, if we can do on an average of 60% occupancy, I think we will deliver the same type of results which other hospitals will deliver at 75% occupancy.
All right, got it. So in that case, now let's talk about the revenue and some, a bit of financial numbers. So are you maintaining the guidance of the anticipated revenue growth in the late teens for FY25 that you have been guiding us?
Yeah, so for FY25, for the first half, we have already delivered good growth in terms of the revenue, and we continue to maintain our guidance for the current year that definitely we should be, whatever the trend we have seen in the first half and the current month, we should be able to maintain the mid-teen to high-teens growth. What we should be, just since we are adding a lot of capacity in the coming years, which we have listed in our presentations, based on the existing units growth plus the new units growth, what we strive internally is that we should maintain 15 to 18% CAGR growth over the next 3 to 5 years time.
On that bed capacity, so you had a goal of adding 1,000 beds by FY27. Are you still on that track?
Yeah, we are absolutely on that track. So we have in the last year, we have started 3 hospitals. We have added the capacity, and then whatever we have planned, I think Rajmundry Hospital is starting by March of coming financial year, FY25. By March, we will be adding, and then 2 hospitals at Bangalore and 1 regional hub hospital at Coimbatore is on track. Plus our Gurgaon facility, which we have anticipated to come by FY27. There may be a 6 months delay because of the government approval. So by next 6 months delay, whatever we are anticipating, we are on the track to achieve 1,000 beds, whatever we have listed at the time of the IPO. And then as we have discussed multiple times with the investors, we are on track to add that. Understood. We have a very healthy balance sheet. We have a cash of 580 crore rupees in the books right now. And our cash generation is very, very robust. So we don't expect to borrow anything from the financial institutions. Our balance sheet will be able to take care of whatever the expansion plan we have listed.
Right, I want to quickly follow up on the guidance piece, right? You've guided for around 18% odd growth, but you're doing 25. You believe that there is a possible upside to the guidance, at least this year?
So is the right question. So what we have to be just that, if you go 1 year back, FY24 was very muted year. So based on that low base, you are seeing the higher growth. But if you go 1 year back, FY23, from there, you will see our growth is 15-16% CAGR. So in case of business, one season or 1 quarter or 1 year can go bad. But what we are trying to strive is that next 3 to 5 years, we should be able to maintain 15 to 18% growth.
No, understood. Okay, that makes a lot of sense. And where should margins therefore lie for you? There are, of course, various moving parts with the kinds of hospitals that you operate, and therefore a margin, current margin, sustainable or not?
Is a very right question. So for us, the litmus test was the first quarter and the second quarter, because in the March quarter of last financial year, 6 months before, we have added 3 hospitals. And in case of hospital, the cost comes first, the revenue comes later, and the EBITDA comes little later. But I think because of our brand name plus the cost management, we have been able to maintain the EBITDA margin. Whatever our effort is that whatever the EBITDA margin we have shown for the 6 months, we should be able to maintain that. We are not looking for any increase or variation in the EBITDA margins. What is our effort is that to maintain those EBITDAs going forward, because a lot of capacity is getting added. There will be always some cost pressure on that. So our effort is to maintain this plus minus 1% we should be able to maintain that EBITDA margin.
Also, Mr. Vikas, so coming to your capex plan, so I mean, are you gonna add any greenfield project or brownfield project? Because if greenfield project is in plan, that may have dent in your profits.
So our business model is always on the lease rental model. We have right now 19 hospital. Out of that, 18 are on the lease model. Is only one hospital which is Vizag is at on the rental. We whatever the other hospitals like Coimbatore or in Bangalore, two hospital Rajahmundry is also on the leased model. The only exception which we have made and gone ahead and doing the greenfield project is Gurgaon, and it made a lot of sense because. The type of building which we wanted, the rental cost was very high, and the space which we get for the hospital was we were not able to get it. After a lot of efforts, we invested a lot of time and efforts on that, we could not get it. Then later on we decided, because it was not making commercial sense to go on the leased model, we have bought the land from the HSVP on the in the auction, in the competitive auction. We have got the position of the land, we have applied for the approvals, and then we'll build the hospital. Obviously, any greenfield projects, if the company is taking land and building on the their books, there will be some impact on the ROC, but it makes a lot of sense for us. Once we were in the drawing board and board discussion, etc., it made a lot of commercial sense to go ahead for the greenfield project for those Gurgaon projects.
Okay, thank you so much, Mr. Maheshwari. It's been a pleasure chatting. Of course, somewhere during this quarter, we'll also call you back on the Smith Show, try and get a better understanding of how things are playing out for you. How should we look at you from a medium-term perspective? But thank you so much for coming in.